Hello and a warm welcome to Stocks to Watch, where we help you make better financial decisions. I am David Materazzi, your business analyst and host, and today I have the pleasure of talking with David Materazzi, the founder and CEO of Galileo FX, a company that offers an automated trading software designed to allow users to automate trades across a variety of financial instruments, including FX, cryptocurrencies, stocks, and indices. Hello, David. It's so good to have you with us today.
Hi, Monir. Thank you so much for having me.
Absolutely. So let's start from the very beginning. What inspired you to work on developing this automated trading software to begin with?
So, during the COVID period in 2020, I was working as a sales and marketing manager at a huge hedge fund in Canada, right? A Canadian hedge fund. And, I've been working there for many, many years, and I was lucky enough to see how professional trading is done and, dealing with thousands of traders and having, the position to be able to hear the market and to analyze the market, what traders wanted, what were their problems. And I saw, a new trend. I saw that traders, they were starting to notice the power and the benefits of automation in trading, of automating a part of your trading, right? So I decided to resign from the position, right, after 8 years, and to start this company basically from scratch. But I knew that, I knew the market, even with a simple product, I knew that this was what was coming. And I was right, because now we see that after 4 years, the demand for these automated trading systems is growing like every year, like a double digits, especially in the US, in Europe, in Japan, Australia. So like the large markets of the world, like the economic powers of the world. So we are here and we see a huge trend, and we were able to catch it very early.
So you listen to traders,
Yes.
you have the data, you found a trend and you took a leap, you left your position
Yes.
and started this company and built this software.
Exactly.
But my question is, what are the factors behind this trend? Why are so many young people today turning to automated trading systems? What makes it so appealing for beginners as well as perhaps professionals?
So to make money in the stock market, historically, you have had like two main ways. Okay. The first way is long-term investing, where your goal is to protect your capital, and you aim for consistent profits and not too much risk, right? Because you do that for your retirement or for your future. So that's your life savings. And that's like one of the two historical, ways of making money in the market. It's a quite boring, approach, but it works. Exactly, buy and hold, and it works. You keep your money there in this SP 500 or whatever, like for 20 years, 30 years, and it works. Okay. The second way it still is manual trading, active trading. So what does it mean? That you have like an active role. It's not like passive, like the first method. So you're actually buying and selling, multiple times a week, sometimes multiple times a day, and sometimes even multiple times an hour. I personally know traders who have been doing it for like 20 years at a professional level, and they do 100 trades an hour sometimes, like, when the market opens, because that's, the kind of almost high frequency trading, right? But that's time consuming and requires a lot of, it's a full-time job. It's more than a full-time job, because you have to watch charts, the entire day. You have to follow the news. You have to look at research. You have to look at data before the market opens. It's a real job, right? That's a professional level. That's how professional traders do. Now there is a new way. So these automated trading systems, in my opinion, they represent like a new way of, getting the best of both worlds. So you have, you can do more manual active trading, but without the time involvement. So it's like a hybrid, right? But at the same time, you can have higher returns and you can control risk even with automated systems. So you spend less time compared to manual active trading, because you're automating a part of the process. The software is buying and selling on your account. So depending on on the software, of course, but like with professional grade software, like ours, like a Galileo effects, you can decide what the software is going to do, right? So you actually have to set some of the parameters, so that the software will open and sell based on what you instructed the software to do, right? So you have the best of both worlds, because you don't need to spend, you don't need to actually click to and buy and sell, you don't need to like, you can actually leave and you delegate a part of the process to a software. And this has tremendous benefits, because by making multiple trades, and analyzing fluctuations as they happen, even if you're sleeping, for example, you can take many more opportunities than you would have to do manually. And you can actually even use the software on 20 charts at the same time, right, with 20 different strategies, for example, right? That's impossible to do for a manual human trader. So you already see that the benefits are there. Now you have to be careful when you pick a software, because this kind of software, unfortunately, it's very, very often marketed as something like an investment service, something like it's a safe bet. There is no safe bet. The software, it will give two different results to two different people. So the merit behind the profit is the person, behind the software. Right. It's not the merit of the software, right? The software is just a tool that you use to increase your odds, of succeeding, right?
Yeah. And it takes a part of that manual labor that you have to do.
Yes.
As a trader. And that, I think, makes trading more accessible to beginners. So yes. As you said, there is no safe bet, and there are rules in this game. So yes. What are the rules of this game that everyone should know about before they actually start trading automatically, especially beginners?
Yes. So the most important fact that you have to accept when you want to invest or trade, whether you are doing it manually or investing long term, whatever kind of investment you want to make, right? Even if it's real estate, every investment has risk, right? And risk, it's a part of the market. Risk cannot be removed from trading. It doesn't exist like a software that can remove risk from trading. Okay, so you need to accept this, and you will be surprised how many people think they can find some magic software that will remove risk. I will just print money, and that's not our message, and that's not how it works. So the rule of the game is, number one, is accept trading as it is. It's hard. Okay, you have to accept this. It's extremely hard. It's one of the hardest activities that you can do, but it's also one of the most satisfying. It's one of the some people, they call it the best game in the world, right? So it has like that that electricity to it, right? Let's call it like that. So, but you have to start from the from the fact that most people lose money. Actually, 95% of people who trade, they lose money, right? Or they invest. When investors, traders, 95%. So the odds are against you. And you have to understand this. Even before you start, you need to understand, okay, this is going to be hard. I have just 5% of chances of succeeding. So you have to stay humble. You cannot start trading thinking, oh, I'm smarter than anyone else, right? I'm going to be, I'm some kind of genius, and I'm going to be able to, be in the 5% just because I'm special. No, you are not special, right? The market is brutal, and you need to know this before you lose your life savings, right? Because of your arrogance, right? So now, I want to be in the 5%. Okay. What are the 5% winners doing that the 95% are not doing? That's what you should look at. So these guys that are winning in trading, they must be doing something that the 95% doesn't do. And if you look at research, if you look at data, even from universities in the US, like Columbia or University of Pennsylvania, they have done many studies about this. Algorithmic trading, automated trading systems, they beat manual trading by 30%. Right, so you're increasing. Yes, if it's the right system, right? If you're just using like some free, or like you're trying to program it yourself, then it's a different. I'm talking about the professional level tools, right? Those that are based on technical analysis, right? That's what you should look at. That use technical indicators to buy and sell. So you already know that by using like professional tools, you can increase, by 30%. Now, if you have professional education, you're going to increase at least 20, 30% more. So you already know that, okay, I need to know what I'm doing, because education, you need some kind of education, right? It's very uncommon that somebody is totally uneducated about finance that will succeed in trading. It seems like it's like a joke, right? It takes a lot of, you need the education. And that's also proven. So you don't need to believe me. You can look it up. You will see that, there is a correlation between professional education and trading. It doesn't mean that if you have professional education, you will succeed. Maybe you will not, but it will increase your chances of succeeding. So education, professional software, you increase your chances of succeeding. But you need to understand and accept that it's hard. It's extremely hard, and that risk cannot be removed from trading. And most importantly, nobody knows everything about everything. So it's impossible, to know what's happening in precious metals, what's happening in the FX market, what's happening in the US stock market, what's happening in the Japanese. It's just impossible to follow it all, right? So what I've noticed, and I've been fortunate enough to see over the years, over 20,000 traders, right? So I see the patterns, those who succeed, those who don't succeed. And those who succeed, they think they do something differently. And one thing they do, they specialize on either one strategy or one stock or one asset, whatever it is. You cannot trade today. I'm going to trade Bitcoin because, I just read the news about Bitcoin. So I'm going to trade Bitcoin. Tomorrow, I'm going to trade Tesla. The day, I'm going to trade Japanese yen. I never seen a trader, making money like constantly with that kind of approach. The people that I've met, they know everything about one asset maybe, or one category of assets. They know everything about it. They don't know much about anything else because that doesn't affect their investment decisions, right? So one guy is specialized in cocoa futures, for example. He knows everything about cocoa futures. He has access to research about cocoa. He goes to the plantations in the South America. He talks to the producers. He go to the actual, markets. So he knows everything about it, and he built a fortune out of it, right? If you ask him something like an opinion about crypto, he has no idea because that's irrelevant to making money for him, right? He makes money with, his specialized knowledge. So that's also a rule of the game, right? You cannot know everything about everything, and it's just a waste of time because you will just know something about this, something about that, but you will not have the specialized knowledge that is required to make money.
I really like all of those messages. Stay humble and focus on things you understand and you can specialize in. And also manage risk well, because risk management is the name of the game. The unfortunate part is that not everyone can manage risk well. So is trading really for everyone, or are there specific factors that should be considered before jumping in?
So like everything, any activity is not for everyone, Some people, why? Because people have different level of risk tolerance, all right? So some people are really comfortable limping off a plane, right? And with a parachute. And some people are afraid of even boarding a plane to go, to Europe. So what does it tell you? That different people, they have different perceptions of risk. They have different ideas about risk. And some people, they just are uncomfortable with risking their money, right? So they should stay far from trading, and it's not for them, because if you're afraid of even losing, some money and you don't sleep at night and you really it's bad for you, you feel bad, that's not for you. Just do something else, right? That you will be able to shine and to succeed at, right? Or let's say you are a weak person in the sense that you are undecisive, you are too emotional, you change your mind, you are not confident in yourself, you are affected by events. If you lose money, you really take it really bad. That kind of person will have a lot of problems in succeeding in trading. Trading is not for that kind of person. It's going to be really hard for that person. It's already hard. So imagine they have also to work on themselves. Then they have to learn. I mean, they just, making it twice as hard. So maybe there is something else they can do in their life, which will be, better for them. They will be happier, right? So because there is like a natural talent. I've seen it. Some traders, they make money from the first month. Yeah, they don't make perfect trades, but you already see that this person, it's a match, right? Trading and this person is just, you see it. It's just the right person with the right activity. Some other people, after a year, they still struggle. They start to be sad. They start to be like depressed, right? So it becomes really heavy on them, and it's just a shame. They should just, find, as I said, something else, because character plays a huge role. It really, and you cannot change it with, by buying some course or like by reading a book. That's like your DNA, right? So you realize pretty quickly, the first month, the first few months, if this is something that you can do well, in the future, or if it is something that's just too much for you. Because trading is not something for weak people. It's you have to be tough. You have to manage your emotions. Whether you make $1 million or you lose $1 million, it shouldn't affect you, right? It should be a stable personality. And that's, most people, if they make $1 million, they think, oh my God, I'm a genius, right? I'm going to be making money all my life. Or if they lose $1 million, even if they are smart people who just made a mistake, they will think, oh, I'm an idiot, right? So their self-perception is too much influenced by these results. But in trading, you have to be stable. And if you lose, you have to be, you don't have to move too much, right? You have to stay calm. You lose or you win, you have to be focused. And this is hard for a lot of people, right? So I understand it's hard. But some people, they can deal with it and they can succeed at trading and they can make a lot of money, right? So it's worth it also to try and see if it's for you or not, right?
Right. And admittedly, it's challenging to manage your emotions and that psychological aspect
Yes.
in trading, which is really crucial, actually. I want to go back to your experience. You said you've had the chance to meet with over 20,000 traders, and
yes,
we looked at the positive factors that help them succeed, but let's look at the other side, the mistakes and the traps that they could fall into. What are some of the common ones, and how can people avoid them?
So especially young people, what I've noticed, and young people, sometimes they can make millions of dollars in trading. I've seen it. Some people are 18, 19, they made like fortunes, okay? And because it's just the right person, right? They are wired for it. They're born for it. It's like you see a rock star, right? You just see that this person was born to do this, right? It's the same with these people. These are like rock stars of trading, right? But what the mistakes that most young people do is because they're following too much news, right? They blindly follow the trends, the latest trends, so everybody's talking about Bitcoin and they get interested into Bitcoin, right? Yeah, the hype. Yes. And that's, you never make money out of this, because the moment you hear about something, it's already late, right? Even if you catch the news after a minute, it's already late, because, you had to act before of that. So that's, following trends is just, it's like spaghetti technique. You're just throwing spaghetti on the wall and you hope some of them will stick. You hope, today I'm trading Bitcoin, tomorrow I'm trading Tesla, the day after tomorrow I'm trading Apple, then I'm trading Japanese yen, whatever, right? So that's like you're just not focused. You don't know where you're going. And if you don't know where you're going, how are you going to go there, right? If you want to reach your goals, you should have a plan, right? You shouldn't just follow the latest trends, right? So you can make fortunes, trading things that nobody trades, right? Actually, a lot of people, that's what a lot of people do, right? So you don't need to trade the biggest names. No, that's not how it works. And the second biggest mistake is of course, when you are young, you want like instant results. We live like in the age of instant feedback, right? You just have with mobile phones, apps, notifications, instant response. So you want to rush it. You want to make money as soon as possible, as quickly as possible, right? And you go live too soon. And this is the biggest mistake you can make, because the best traders, they start in demo. Okay, why you start in demo? Because you're not gonna lose money, you're not gonna make money, but you're gonna learn. You're gonna learn some lessons, and that's valuable as money. That's what will make you the money later, right? So you test the different strategies, you test different software, different settings of the software, different assets, and you see what works for you. What are you comfortable with, right? Because of, as we were saying before, different people have different levels of risk. So you try, okay, I'm gonna try like an aggressive strategy on gold, and I'm gonna try, I don't know, conservative long-term strategy on Tesla, for example, right? And you can test different at the same time, right? I'm gonna use this software on this chart, and we're gonna use this other software. You start experimenting, and that's like the learning phase, right? And you don't go live immediately like most young traders do, right? You take the time to learn, because you need to understand what you're doing, right? Risk comes from not knowing what you're doing. And if you don't know what you're doing, that's the biggest risk.
Right.
Because you're just gambling your money away, right? You just that's not investing, that's gambling. So we are talking about in making informed decisions. That's also the difference with gambling, because in trading, you're making informed decisions. You make a decisions because of your analysis and because of data and because of what's happening and how you think things will work out, right, for the asset. It's not like a gamble. Oh, I'm going to gamble on this, just, taking a chance, right? So taking your time to stay on demo, experiment a few strategies, few software, few tools, and see what happens. When you find something that you're comfortable with, you can go live with a small amount of money, right? Why? Because there is also always the chance that what you found in demo, it will not work in a live environment. So why risk it all, right? Your money is valuable. It's very valuable. So you should allocate it wisely. So you start with $100 and you see what happens. Let's say your strategy keeps working and you make money live, in a live environment. You can put another, I don't know, $500 or whatever, right? You can slowly increase your capital, but always, keeping like watching what this software is doing or whatever strategy you're using. You have to watch it. You cannot just pretend that you go away like for 30 days and you don't watch it, right? You need to monitor it, because in the market, anything can happen at any time. There could be like a war. It could be like, election, something about the election, crazy things happen. Things happen in the world, and that moves the markets, shakes the markets. Yeah, in the short run, the markets is affected by what happens. Okay, so spend time in demo. If it doesn't work when you go live, you go back to demo and you try to understand, okay, why was this strategy, this software, settings working on the demo and they were not working on live? Maybe it's a matter of spread. Maybe the broker has different spreads in demo and in live. Maybe you have to change broker, find a broker that gives you like a better, commission or package or whatever, right? So there could be like some adjustment, but you don't need to give up. You don't have to give up. You just, everything that you find in front of you, you just deal with it, and then eventually you just, with this approach, you would be successful, right? Because you are doing, what you're doing, you're using the right software, you are experimenting and you're tweaking and you're looking at what you're doing. Your chances of success now, they are huge. They're not 5% as before.
Right. I would argue that a trader should have at least 2 or 3 profitable months on a demo account.
Yes, absolutely.
Before switching, just to make sure that they are achieving that consistency.
Yes, exactly. Actually, some hedge funds that I know, they have minimum 6 months, right?
Right.
Yeah. So, and if you lose, if you hit your loss limit in a day, like for 2 consecutive days, they're gonna stop your account and you go back study, and then you can start trading again. Like they suspend your access because they tell you, hey, you cannot lose like two days in a row. So it's really like performance, based industry, but that's how you should approach this, right? As a performance based, think like, it's about merit. So the merit is measured with performance. It's not about talk. It's not about being selling something. It's about your performance. And for some people this can be stressful. For some people, they say, oh man, I cannot be judged by numbers because I'm a person, blah 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 blah. Okay, then trading is not because you're judged with your results. That's what people judge. They don't even judge your appearance or your ethnicity or whatever, right? They don't care. They just look at your results. That's how
the reality in trading.
Exactly. That's why I like it, right? Because I think it's fair. You're not judged by, you can even be like somebody who has an unpleasant personality, but people will respect you, right? Because you have succeeded in trading, and trading success is really admired in society. If you are a successful trader, people will look at you, wow, this guy is smart, right? He makes money in the stock market. It must be some kind of genius. So you have all those bragging rights that in other industries, you don't have, and it has some sexiness to it. The industry of trading, they make movies about it, even if they are not realistic, but there is some kind of, fascination of the public. So this, it motivates people also to start trading, and it motivates some bad actors also to say, oh, I'm a successful trader, blah blah blah, blah. So that's all like fake success, just to sell some course or some signal service. And unfortunately you see that in the industry, right?
Yeah. And this also brings us back to risk management and how important it is. So why is it so important, and what tips can you offer our audience to help them manage risk better?
So managing risk is not important. It's the only thing basically that you have to do. So once you realize that best traders, even the best investors in the world, what they do is manage risk, manage their, potential losses and their losses. Why? Because if you take care of the losses, the gains will take care of themselves. It's just useless to have huge gains and then you have huge losses. You're just playing like a gamble, a gambling game of high stakes gambling. You should aim for smallest losses as possible, and even small gains, because if you have small gains but smaller losses, you're going to be profitable, and that's the most important thing. The goal should be profitable, right? So how can you be profitable? You can be profitable by managing your losses, by limiting your losses as much as possible, and there are many ways to manage your losses, right? There are some hedge funds, they use very, 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 sophisticated ways with derivatives to manage, their losses, their potential losses in case they're wrong, because you never know. I'm making this decision in the market. I don't know if I'm right, there is a possibility that I could be wrong, right? Even the best people, sometimes they make mistakes, right? So as Warren Buffett says, the first rule of investing is never lose money. The second rule of investing is never forget rule number one, right? So that's basically the only thing. And you manage risk by knowing what you're doing, and using the right tools. For example, Galileo FX, our tool, we give you 5 ways to limit your losses, right? To like levels of loss protections, 5 ways. And you can use all of them, just one of them. It's up to you, because, different people have different styles, different approaches, different risk tolerance. So we give freedom to people, right? We tell them, this is what you can do. And then it's up to you. Some people, they use all of them. Some people, they don't want to use any of them. As long as they know, right, what they're doing with their own money. For us, for me, I just want people to be free and to use the software, and to have their own creativity on how they use it based on their own taste. We're not forcing anything, we're not standing, but we give you these tools to limit losses, because that's, you won't believe how many people they think I'm going to find this, the secret investment, the secret software, the secret that we make it like, we remove risk, and we make it like risk-free, and we make investing risk. There is no, as I was saying, just to say what I was saying at the beginning, there is no investment that doesn't have risk. Even real estate, investment have risk. Even bonds have risk. Everything has risk. But risk should not be ignored. Risk should be accepted and managed. You should manage risk. That's your job, right? But if you pretend that risk doesn't exist, oh, if I don't think about risk, then I will not risk. That's just yourself, trying to persuade yourself, trying to convince yourself, but that's not how it works. So accept risk, manage risk, understand your level of risk. We have some people who are comfortable with crazy levels of risk. And even myself, I would never accept that kind of risk. But that's their own decision, right? They are 100% comfortable with high levels of risk because they understand that high reward, high risk, right? Low reward, low risk. That's usually how it is, right? If you want to make a lot of money, you also have to risk some kind of money, right? So that risk is also another, the other side of the coin of reward. So there is very, very rarely there is a lot of like a huge reward with low risk. So risk has to be managed. It can be managed with the right tools and the right mindset, but should never be ignored.
Great insights. Thank you so much, David Materazzi, the founder and CEO of Galileo FX. I really enjoyed this conversation, and I hope to see you very soon on this show again.
Thank you so much, Munir. It was a pleasure. I think we gave a lot of useful information to users and to trade responsibly, right? And to understand what you're doing and to do things the right way.
I think so too. Thank you so much.
Yeah, thank you. Thank you, Munir.